Hello and welcome. Moss Adams is pleased that you've joined us for today's session, Proposal and Pricing Strategies to Win Federal Contracts. Before we begin, I'm going to play our housekeeping video.
Welcome and thanks for joining us. Moss Adams webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, we have 2 presenters with us today from Moss Adams. We have Rich Weber, partner, and Karen Melendez, senior manager. Their bios and contact information are located in your webcast console. And now I would like to turn the floor over to Rich to get the presentation started.
Thanks so much, Amy. Hi, everyone. My name's Rich Weber, and I'm a partner here at Moss Adams. I've worked with government contractors and federal income tax and federal contracts compliance for about the last 18 years. My clients span really various industries, but I've got a focus on professional services firms, technology companies, and defense contractors. So happy to be here with you today, and I'll pass it over to Karen to introduce herself.
Thanks, Rich. Hi, everyone. Karen Melendez. I'm a senior manager here at Moss Adams, and I primarily work with government contractor clients on the accounting side. So I assist them with helping set up their DCA-approved accounting systems, training their teams on those requirements. I help with a lot of ICE models, preparing and reviewing them, and also providing support to clients during DCA audits. I'm happy to be here with you today.
Thanks so much, Karen. So today's webcast is on proposal and pricing strategies to win federal contracts. So I kind of wanted to start with highlighting some of the key outcomes you can expect after completing the training. First, we'll kind of go through a high-level understanding of the federal procurement life cycle. It's meant to be an overview that'll equip you with the knowledge really needed to craft successful proposals and really to stand out in a competitive environment. I know this week is a lot going on in the federal government with the change in administrations, a lot of discussion around DOGE, and which is the Department of Government Efficiency, and potential changes on some of these concepts. But I think on the whole, the content that we go over today would probably remain at least in concept. So then we're going to go over a little bit on FAR compliance. FAR is the Federal Acquisition Regulation. It can be complex, but we're going to break it down, really to show you how to effectively incorporate these requirements into your proposals. It's really crucial for ensuring compliance and avoiding potential rejections. We're also going to explore how to develop effective pricing strategies. You're going to learn various methods for building pricing structures that really not only enhance your profitability, but also keep you competitive in the federal contracts marketplace. And then we're going to cover kind of how to perform cost and risk analysis and really introduce the tools that will help you really make informed pricing decisions while effectively mitigating risks associated with your proposals. And then we're going to go over ways to maximize opportunities and learn about techniques for aligning your proposals with government priorities, which can really improve your chances of winning contracts. And so hopefully by the end of the training, you'll be equipped with valuable insights and really actionable strategies to really enhance your proposal development process. So from there, we will get started. I'd like to talk just kind of briefly about who Moss Adams is and some of the solutions that we bring to our clients. We're a national CPA firm. We do traditional audit and tax services and then have a range of consulting services. The firm's been around for 110 plus years. We've got 4,400 plus professionals, and we serve a lot of government contractors. So, and really our dedicated government contractor solutions group focuses on helping clients in a lot of different industries with all things FAR compliance, DCAA audits, cost accounting standards, et cetera. So, and then that's just another slide here on the overview of some of the service offerings that we go over with our clients. So I'm going to go right on, and it looks like we have a polling question.
All right, we do. So the first of 4 polling questions is, what is your primary reason for attending this webcast? A, to learn best practices in proposal development. B, to improve pricing strategies. C, to gain insights into federal contracting trends. Or D, I just need the CPE credits. And the polling questions are located right on the slides that we're presenting. So if you can't see it, you may need to hit F5 to refresh your console. And then to respond, please click the button next to the answer you choose, and then make sure to hit that submit button. All right, it looks like most have responded. We'll do another 5 seconds. And here are the results.
Thank you, Amy. Very good. So it looks like we've got, kind of a mix here, and I love I just need the CPE credits. No problem. Happy to have you educated and get some credit for the session today, but it looks like we've got a good mix here. So thank you. And so, I'd start with this slide here, and it kind of outlines, in a graphic, the overall stages of the federal procurement life cycle. So we've kind of broken it down into 5 key stages, and it's really a structured process used by the government agents, the federal agencies, to acquire goods and services. So if you leave today with nothing else, and you've got this slide, that you at least have kind of an overall process of what, concept of what the various stages are. So, the goal, each phase really plays a critical role in ensuring that taxpayer funds are used effectively, efficiently, and in compliance with legal and regulatory requirements. So that's, just the very top level. So if we break it down and we look at phase one, the planning phase, really this is the foundational phase where agencies define what they need and set goals for the procurement. So this starts with each individual agency, and there's an overall goal setting part of the entire process. And so the activities in this stage really includes conducting market research, identifying funding, and developing an acquisition strategy. And this is on the government side. And key considerations here is really understanding mission requirements, timing, and budgets. And on the contractor side, as a commercial enterprise contemplating getting into federal contracting, understanding what goes on in this phase is also critically important. And then if you look at phase two, in this phase, the government communicates its requirements to potential vendors or contractors. I'll use vendors and contractors synonymously. Agencies prepare and release solicitation documents in this phase, and it's, requests for proposals, requests for quotes, or invitations for bids. And really transparency and fairness are central to this step, and just understanding, and encouraging competition. Phase three is evaluation. And when you get into this phase, proposals or bids are received and reviewed and scored based on predetermined criteria, such as technical capabilities, cost, and really past performance, and potentially a combination of all of those items. Agencies really ensure compliance with rules like the Federal Acquisition Regulation when selecting the best value for the government. And then the evaluation may involve multiple stakeholders, including contracting officers and technical experts. And phase four is the award phase. So after the evaluation, a contract is awarded to a successful contractor. The agency ensures proper documentation and notifies both the winning bidder and those who were also unsuccessful. And then protests or disputes, if any, are really addressed in this phase. In phase five, you've got post-award. So this phase focuses on contract performance and management. Agencies monitor deliverables, ensuring compliance with contract terms, and resolve any issues that arise. And this phase really ends with contract closeout, really ensuring all obligations are met. And so today's focus is going to be on the proposal development and pricing strategy, which really fits into, the first couple of phases here. And so, any government contractor aiming to successfully compete in federal procurements has to have a pricing strategy that really encompasses a lot of different aspects of what we're about to go over. So next we go into the overall, a little bit more detail on the overall procurement timeline. And really there's three parts to this: the pre-RFP, the RFP, and then post-submission. And understanding what goes on in each of these is important to the overall process as well. In the pre-RFP phase, before the RFP is issued, the government really refines its acquisition strategy and begins drafting solicitation documents. This is the ideal time for contractors to position themselves strategically. So a contractor would want to develop a, quote, capture strategy in this phase, and really you want to understand the agency's need and align your capabilities. Then you may want to engage in teaming with complementary partners to strengthen your offering, and conduct market research and gather intelligence by reviewing, prior contracts, attending industry days, or networking with other stakeholders. And then when you get to the RFP phase, once the draft RFP is released, contractors can provide feedback and clarify requirements. So, the final RFP officially starts at the proposal process, and contractors really have to focus on compliance and responsiveness in that phase. by addressing all instructions and evaluation criteria while also monitoring for amendments or changes to the RFP. You want to use the Q&A period to clarify any uncertainties that come up and really refine your proposal. And then when we get to the post-submission phase, after submission, agencies evaluate proposals based on criteria like technical approach, past performance, and cost. And contractors may be asked for clarifications or best and final offers in this phase. And finally, after everything that goes into the process, contract awards are announced, and then there's a chance for unsuccessful contractors to request a debrief, which really provides valuable insights for future opportunities. And so the debrief can be thought of even for an unsuccessful contractor as a learning opportunity. And so really by understanding and preparing for each of these phases, contractors can enhance their competitiveness and really improve their chances for success in federal procurements while really ensuring compliance. So in this slide, success in government contracting, success really begins with understanding, what are the three primary contract types defined by the FAR. And so this graphic kind of delineates, you've got fixed price, cost reimbursable, and time and materials, which is also known as T&M. And really each contract type requires a distinct approach to proposal development and pricing strategy, really tailored to its unique requirements and risks. So for fixed price contracts, the contractor delivers a defined product or service at a set price. So the strategy for these contracts focuses on managing risk by accounting for contingencies, emphasizing cost efficiency, and potentially offering value-added services like warranties or extended support. And so that's fixed price contracts. Cost reimbursable contracts, the government reimburses allowable costs plus an agreed upon profit. So really to succeed with this type, you need to provide a detailed, cost breakdown, demonstrate transparency and cost controls, and really ensure compliance with FAR cost principles. Cost is, very scrutinized and under these types of agreements. And then finally for time and materials contracts, the government pays based on an agreed hourly labor rate and reimbursed materials costs. So really the strategy here is to highlight competitive rates, emphasize efficient resource management, and really to demonstrate flexibility to scale resources as the project evolves. So as you get into one of these types of contracts or the other, you're going to have a different pricing strategy. And so it's always helpful to kind of take a step back when you get to this point and say, okay, what are the overall acquisition methods? And really the FAR outlines two primary methods of acquisition. You've got price-based acquisition under FAR Part 12, and then cost-based acquisition under FAR Part 15. And each method impacts pricing requirements and really documentation. So tailoring your approach with each of these is really essential. So price-based acquisition focuses on really commercially priced items or services readily available in the market. So, this method really minimizes administrative burden because certified cost data is not required. And pricing is instead determined using catalog price or historical data or market benchmarks. And then under cost-based acquisition, this really applies to customized or complex projects where commercial pricing isn't established. So this method really requires detailed cost breakdowns, including labor, materials, and profit. It also involves more compliance and reporting, such as certified cost and pricing data. So if you think about the overall methods of acquisition, you've got the price-based and the cost-based. So And really, when you decide on the approach, you focus on market-driven pricing and value differentiation for price-based acquisition, and for cost-based, you prioritize transparency and detailed justification to build trust and credibility with the government. So now we kind of jump into price-based acquisition in a bit more detail. So, before we kind of dive into it, I would say it's important to understand how the FAR defines a commercial product or service. And so this definition is really under FAR 2.101, and it's foundational to understanding the price-based acquisition because it determines how pricing is approached and what compliance requirements apply. So under FAR 2.101, a commercial product or service is one designed for general public use and sold primarily in the commercial marketplace. So key points on this is minimal modifications for government use can still classify a product as commercial. An example of that may be a retail laptop with added memory for government needs still remains a commercial product. Why does it matter? Defining a commercial product or service is critical because it informs the use of price-based acquisition under FAR Part 12. So commercial products simplify the acquisition process by really relying on market-driven pricing and reducing administrative burden, which is why understanding the definition is really essential to aligning, your pricing strategy. And so the takeaway here is that, a product must serve a broader market with only minor modifications for government specified applications. So understanding, this understanding really sets the stage for pricing strategies under FAR Part 12, which we'll explore further on the next couple of slides. And so, this graphic, kind of goes, down market-driven pricing, price reasonableness, and exemptions from cost data. Just kind of some concepts under price-based acquisition, and commercial product pricing is distinct from non-commercial items, really due to its reliance on market principles. So under FAR Part 12, pricing is based on catalog prices, historical sales, or market comparisons rather than requiring detailed breakdowns. So this kind of simplifies the administrative process. And while cost data isn't required, the government still needs to ensure that prices are fair and reasonable. And I think that you'll get even more scrutiny in this area under the new, potentially new federal procurement processes under DOGE potentially. Contractors really have to demonstrate, that the prices are fair and reasonable by providing sales data for similar products sold to commercial customers. So comparing prices to similar offerings in the market or conducting independent analysis. One advantage of FAR Part 12 is that it generally exempts contractors from submitting certified cost and pricing data. And if sufficient commercial sales data isn't available, the government may request unpriced data to help justify the price. And so, the takeaway here is that FAR Part 12 really simplifies pricing by leveraging market-driven strategies, emphasizing kind of flexibility while maintaining fairness and accountability. So, all right. Looks like we have another polling question here today.
All right, thank you, Rich. So the second of 4 polling questions is, what is your current level of experience with federal contract proposals? A, beginner, B, intermediate, C, advanced, or D, expert? And then just a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. right, we'll do a few more seconds. Make sure to hit submit. And here are the results.
Thank you, Amy. Very good. A lot of beginners here at about 67%, intermediates at 23%, and then some advanced contracting professionals here at 5%, and experts. Wow. So very good. That's it. The webcast is probably tailored pretty well to beginners and a little bit into intermediate. So I'm happy to continue along here. So, and I think with that, Karen might jump in.
Yeah, thanks, Rich. So I'm going to pick up with the cost-based acquisitions. And really, this is where the buildup of cost and documenting your pricing strategies is going to become important. So FAR 31.201-1 provides the framework for determining total cost and proposal pricing. So this slide is it highlights the main components of total cost that you'll need to put into your proposal. So direct costs, indirect costs, cost of money, and credits. So I'll give a little bit of background on each one. Direct costs are going to be expenses that you incur that are attributable directly to a specific contract. Examples here would be labor, direct labor. So that is hours worked by employees that are specifically assigned to a project, or supplies, materials that are purchased to be used exclusively for one contract. And why do direct costs matter? Those are really going to be the basis of any of your pricing. So it's the foundation of your pricing. As on top of that, you'll add your indirect rates. So you want to make sure that you have your processes and policies sufficiently documented and justified to align with contract requirements for all of the direct costs. Next, indirect costs. So the definition of indirect costs is costs that are incurred that are shared across multiple projects or contracts. And examples of this would be facilities maintenance, utilities, things like that will support multiple efforts. General and administration costs like HR or executive salaries. And really you want to establish a best practice where you're establishing a consistent and auditable allocation method. So you want to define those indirect cost pools and define those bases, which are the consumption of those costs, so that you're allocating them fair and equitably across multiple contracts. The other two components of total cost would be cost of money. So that is an imputed cost that represents the opportunity cost of capital investments. And this really comes into play if you're an organization that has significant fixed assets used in contract performance. So mostly manufacturing companies will propose with cost of money. And one important thing to note is that if that's a cost that you want to be claimed, then you're going to need to make sure that it is proposed at the time. And then credits. So any credits that you're expecting, adjustments to costs, rebates, refunds, or vendor discounts, those should be included in your proposal and applied into the area of the proposal where the original costs are based. So, understanding these cost components is really important as you're looking to build up your proposals. And we'll get into some more detail on the next slides, but this is kind of a high level overview of what makes up a cost-based acquisition. So along the lines of composition of total cost, the FAR will provide guidance on how to determine the total cost of the contract. Some key parts to this regulation include allowability, reasonableness, allocability, and then if applicable, the cost accounting standards. So the regulations emphasize that only costs that are allowable under the applicable cost principles can be included in total cost. So allowable costs must be reasonable, allocable, and compliant with the terms of the contract and applicable regulation. So there may be certain costs that are not allowable according to a contract, maybe some type of direct travel, maybe G&A applied to your ODCs. And then there's the costs that are expressly unallowable according to the FAR. So you need to make sure that your proposals account for those costs so that they're not included in your proposal. Also, costs must be reasonable in nature, meaning they don't exceed what a prudent business would incur in a similar circumstance. So, there's different factors that would influence reasonableness, like market condition, cost of similar items, or, the overall nature of goods and services. And then allocability. So those costs that are allocable to the contract mean that they can be assigned in a way that's in accordance with the cost accounting practices. And that will assure that costs are distributed appropriately amongst different contracts. So you want to have a consistent way to allocate those indirect expenses and the direct expenses. And then for certain contracts, if you're not exempt from CAS, the cost accounting standards, then compliance with the cost accounting standards may also be required, and that can impact how costs are calculated and reported. So, contractors are required to maintain documentation to support contract costs that they claim and propose under the contract, and they should be able to demonstrate the allowability, allocability, and reasonableness of those costs. So just to highlight a little bit in more detail, CAS 401. So when using cost-based acquisition strategies, pricing must be consistent with the contractor's cost accounting practices. And even if your organization isn't subject to the cost accounting standards, really it's a good practice to be aware of CAS 401 and just to take this into consideration when you're estimating and reporting costs. So high-level overview, CAS 401, the title is Consistency in Estimating, Accumulating, and Reporting Costs. And, really the purpose of this standard is to ensure that costs are treated consistently across the different stages of contract performance. So when they're estimated in your proposal, when they're accumulated, and how they're reported. And this really it fosters transparency, accuracy, and fairness in the contract pricing and execution. So really, you need to treat, contractors must use the same method for estimating costs when they're proposing on the contract as they do when they're actually accumulating and reporting the costs. So, for example, in a proposal, if you apply overhead as a percentage of direct labor, then you'll want to make sure that you're accumulating your actual costs in the same manner, not applying it in a different manner. And that's really going to avoid double counting or excluding a cost. And, you don't want to include a cost such as like a direct material in a proposal, but then when you're doing the actual reporting, change it to an overhead so it gets applied to multiple contracts. So, it really facilitates trust between the government and the contractor, knowing that they can compare apples to apples when they're comparing your proposal to the actual performance of the contract. One other thing that is applicable for some cost-based acquisitions would be FAR 15-2, and this is regarding certified cost or pricing data. So certified cost or pricing data includes factual, accurate, and complete information that is necessary for the government to evaluate proposed costs. So a contractor is required to provide this information. It may involve labor rates, material costs, overhead rates, and other financial data. And there's a threshold. Currently, the threshold is $2 million for most contracts unless there is an exemption. And this requirement is contractors must certify that the data that they're including, the cost or pricing data, is accurate, complete, and current as of the date that they're submitting it. And this is a formal statement that the contractor signs when they submit the information, and it really holds them accountable for the data submitted. And the purpose that this is in place is really to prevent fraud, waste, or abuse in government contracting, and it helps ensure that the government pays a fair price for goods and services, and that contractors don't inflate those costs. So in accordance with certified cost and pricing data, contractors need to follow the cost principles outlined in the FAR, again, ensuring that costs are allowable, allocable, and reasonable. And the contractors must maintain those records, documentation to support all of the data that has been submitted. That way the government can review it if needed to verify. And a consequence, certifying your cost or pricing data, it's an important part of the process. And, the government can take action, like including a price adjustment, penalties, or even criminal charges if they find that there was any intentional misrepresentation. And there are exemptions. There's certain contracts that may be exempt from this requirement. If it's a contract that's awarded based on adequate price competition, contracts for commercial items, like Rich talked about earlier, that is a simplified acquisition process, or contracts with small businesses under certain conditions may also be exempt from certified cost or pricing data. So this is an area really, understanding the requirements and those implications. It's important for contractors, as they engage in federal government contracts, just to understand and be compliant and avoid any potential issues during their proposal or negotiation process. All right, Amy, it looks like we're up for polling question number 3.
All right, so the third polling question, which aspect of proposal development do you find most challenging? A, understanding requirements, B, pricing strategies, C, writing and presentation, or D, compliance and regulations? And then also, I do want to remind you that you have the option to submit questions for the presenters in the Q&A window. We do have some time carved out at the end to answer some audience questions, but if we don't have time to respond to yours, we will do our best to follow up with you afterwards. All right, Karen, here are the responses.
Okay, so which aspect of proposal development do you find most challenging? It looks like the top answer, understanding requirements, that's definitely one that most contractors find challenging. Some of those, RFPs have so much information embedded, and really just getting an understanding and making sure that you are responding to everything and understanding what they're asking for. So that's a common one. And then pricing strategies, compliance. Okay, yeah, that's good to know. I'm going to move on to the next slide. Okay, so this slide will highlight, it highlights the fundamental components of basis of SE. And this is a critical document, a critical part of government contracting proposals. The BOE, it serves as the foundation for your cost proposal, provides detailed explanations of how you derived all of your estimates. So the different elements are direct labor, subcontractors, other direct costs, indirect rates, and fee. So like we spoke about before, direct labor, that's going to refer to the personnel that are directly contributing to the project's execution. So employees that are performing technical, managerial, or operational tasks that are outlined in the contract. So when you're estimating direct labor, you really want to identify, what are the roles, what are the skill levels required for this project? What are the different labor rates of that role? And you need to provide backup information such as, historical compensation data or industry benchmarks, collective bargaining agreements, have some support for the different labor rates that you're proposing for each category, and also the hours that are required, and ideally tie those to a specific task or deliverable within the proposal. And this will be one of the key components of your basis of estimate. Also subcontractors. So if you've decided that you're going to team up with some other subcontractors, maybe they have unique expertise in a certain area or a cost advantage, you'll want to get from them all the relevant information on their costs. So their labor, their materials, or other resources that are specific to their scope of work. And you'll need to include that in your estimate. You'll also want to clearly explain your rationale for including those subcontractors. Again, highlighting their unique expertise or, other types of advantages. Other direct costs, so ODCs, those are going to be other project-specific costs that aren't labor or subcontractor related, such as travel, materials, supplies, if you need to rent any equipment, and it's important to tie in those costs to the contract requirements. So, for example, if there's a requirement to visit, a certain amount of site visits, then you'll want to give the breakdown of, how many trips, what locations, what are the costs for airfare, lodging, per diem, things like that. And then within each of those buckets, you want to make sure that those are compliant within the government regulations, that you're not exceeding the per diem amount based on the location of travel, things like that. And then indirect rates. So, that's a big part of the cost buildup. So, indirect rates are going to be how you allocate all of your indirect costs, whether it's overhead, G&A, fringe, facilities, whatever your indirect rate structure may be. You want to be able to demonstrate, what are those cost pools made up of. If you have an approved accounting system, those rates should be coming from there. You want to explain the methodology, again, ensure your compliance with FAR, the cost accounting practices, and really use the most current and accurate, reliable rates as of the time that you're putting the proposal together. And then fee. So, the fee or the profit, that's your return for the work that you're going to be performing. And, it should be aligned with the risk and responsibilities that come along with the contract. So, it may be variable based on different factors like the complexity of the work or the level of risk, market competition. So, really when you're proposing a fee, you want to make sure that it's competitive, but also reflects the value that your company brings to the project. So you'll want to have some backup information to justify that, especially if it's, not typical in the typical range for contracts, of a similar type with similar company. It's really just important with all of these different categories to, document your assumptions in the process, keep all of your supporting data organized, whether it's benchmarks, pricing guides, previous contracts, and really just like what risk level you're using to estimate each of these items, as this becomes the basis of your cost proposal. So some best practices, cost estimating doesn't just happen in a silo. It's not just, the finance department or the contracting department that comes up with it. You really need to, all these things we're going to walk through here really is are important components of putting together your cost estimates. So, this is going to highlight some best practices and then help ensure that your pricing is reasonable, fair, and competitive. So, consider historical data. So, a good starting point is to leverage historical data from previous projects or proposals. So, time reports, payroll registers, things like that. And that will really help provide a basis for estimating costs, especially if it's a recurring type activity or deliverable. You want to make sure that the data is relevant and up to date. If you've delivered similar projects in the past, you want to review those material costs, subcontractor rates, just to make sure that they're still relevant and accurate, or update them accordingly into your current estimate. Scope, inflation, market conditions, those kind of things, may impact some of those costs significantly. So you want to make sure that you're considering that. And then again, regularly updating your estimates. So, cost estimates, those should not be static. So requirements may evolve during the proposal process. If the government issues an amendment to the RFP and now there's additional requirements, or the scope has changed, you want to update your estimate and not just, keep it with your first draft. And that will really be proactive in the whole process and help you avoid, any unexpected cost overruns, especially if that's, let's say a fixed price contract. Consider all cost elements, direct, indirect. So a comprehensive cost estimate will include both direct and indirect costs. So like we said earlier, direct costs will be direct labor, materials, travel, or subcontractor costs. Indirect costs are going to be things like overhead, G&A, all the costs that you're allocating out based on your indirect rate structure. So, you want to make sure that you have all that documented and how you're applying those indirect rates to your direct costs. Involving subject matter experts. So, you want to collaborate across your organization, and that's going to really help develop accurate estimates. So, engaging subject matter experts like engineers, finance, program management, that can provide insight into the technical requirements, whereas the finance experts, can ensure that the estimate will align with the indirect rate structure. So it's really good to get buy-in and input from each department that is relevant in the proposal. Consistency. So consistency across cost estimates is essential, especially if your proposal spans multiple tasks or deliverables. So, a great idea would be to develop a standardized template with methodologies and tools across your organization. That way you can easily compare and they'd be consistent. So, you want to make sure that your labor rates and overhead allocations, cost assumptions are applied consistently throughout the estimate. Inconsistencies, those can really raise red flags as the government's reviewing, and that, can affect your credibility. Indirect rates. So again, that goes cost. So indirect rates, those play a big role in the proposal. So you want to make sure they're accurate and timely. If you're proposing on something late in the year and you're using rates from a year or 2 years ago, those might not be relevant or accurate anymore. So you really want to, make sure that they're based on your, most recent financials. And also that they're compliant with the FAR and any cost accounting standards, if that's applicable for this contract. So, really with all of these, different best practices, transparency is key. You want to make sure that you're documenting your assumptions, your methodology, your data sources to build up your estimates. So again, like if you're estimating labor costs, note the basis for your labor rates. Did you use historical payroll data for a certain employee, or a salary survey for, particular employee that you're looking to hire? Make sure you include assumptions based on work hours or the team size. That will really help support the proposal if the government comes back with questions. And that also just helps build trust with the contracting officers as they're going through the process, if you have good foundation of what's supporting all those costs that are being proposed. Okay, so just a couple more things. So some key components for a successful proposal. So I'll talk through the left side first and then touch on the right side. So understand the requirements. Again, like I think Rich had mentioned kind of in those 5 stages of procurement, understanding the requirements before you jump in and just start developing the cost proposal, you really want to assemble a team together to go through what are the requirements of the contract, set deadlines within your organization, just so you understand who is responsible for each part, what is the solicitation, actually requiring or asking for, and who's going to be responsible for those things. So, misinterpreting these, they can lead to pricing issues or even disqualification. So, you want to make sure that you're aligning your pricing strategy with the scope of work and the deliverables and the expected outcome. And really the pricing, the cost and pricing is one component of the whole proposal. So technical approach, your proposal should also reflect on the technical approach for the contract. So if your proposal requires specialized skills or resources, you want to ensure those are clearly justified in your cost estimates, and then also include a strong technical narrative which will support that rationale for your pricing. The management plan. So the management plan should outline how your team will control costs while they're executing the contract. So this could include things like risk management strategy, cost containment practice, or processes for ensuring efficiency in other ways. Past performance. So demonstrating any relevant past performance, not only builds trust, but it provides a foundation for your pricing structure. So if you've successfully delivered similar work at comparable costs, you can use that history to support your proposal. And the cost proposal, this is kind of what we just walked through with the basis of estimate and the certified cost or pricing data, but this is really going to be the heart of your submission. For government contracts, your pricing must be fair, reasonable, justifiable. So really, leverage that market research, historical data, any competitive analyses you have on hand or can prepare. That will ensure that your pricing aligns with the government's expectations, industry standards, and will really give you a strong proposal as compared to your competitors. And of course, compliance with regulations. So you want to make sure that your proposal is in compliance with any FAR, DFARS regulations. So submitting that cost breakdown, things like that. Just anything to be proactive in avoiding any non-compliance with the solicitation. The government's good at putting up different checklists and resources for contractors online. DCAA typically has, a lot of good tools. They'll have their audit programs for different types of things like the pre-award audit or the cost accounting standard audit or adequacy checklist for ICE models. So the one we have presented here is the DFARS proposal adequacy checklist. So, you can just Google that and, you'll see right online the checklist that DFARS publishes that, it shows you, everything that's required that they're going to evaluate for the reasonableness of your pricing. So it will have, a checklist for the general requirements, the different cost elements if the proposal is subject to certified cost or pricing data. So it's kind of a good tool, once you're in the middle of the proposal, just to make sure you're right down, on the right track and really addressing the things that they're going to be reviewing for in your proposal. So we're going to wrap up. It looks like we have a few minutes left, but really now that we've covered some of the key aspects of cost and pricing and government contracts, we'll just go through some of the key takeaways. So by following these practices, you can increase your chances of success while minimizing any risk during the procurement process. So first here would be understanding the requirements. So like I said earlier, really understand the requirements, develop a team, assemble a team, and carefully review that RFP or RFQ to identify the scope of work, the deliverables, and what the government's going to be evaluating in this situation. And you want to pay attention to compliance with the FAR or DFARS, missing a key requirement can lead to disqualification. So it's really important to, ensure that your proposal meets every stated need and goes into as much detail as the government is looking for. You want to develop a comprehensive basis of estimate. So, like we said, this estimate is going to be the backbone of your cost proposal, deriving like how you came up with your costs and why are they reasonable. You're going to clearly outline all of your assumptions, methodologies, data sources, and include all the detailed breakdowns of costs, direct costs like materials, labor, and then also your indirect cost structure and your proposed fee. This really helps make your proposal transparent and defensible in any audits or negotiations with the government. Again, use accurate and defensible data. So that's key when you're building trust with the government. So historical data from a similar project is a great baseline, but you also want to make sure that it's updated to reflect any current market conditions or changes in scope. So that would be like if labor rates increased or material costs fluctuated, transportation costs, things like that. Using outdated or inaccurate data can lead to overpricing, and that would hurt your competitiveness, or underpricing, which you might run the risk of losing money if it's a fixed price contract. Again, collaborate across teams. Cost proposals should never be created in isolation. You want to involve those subject matter experts from across your organization: engineering, finance, operations, program management, functions like that. The engineers can help estimate hours. The finance teams can validate the indirect rates. Project managers can, adhere the timeline to the contract terms. So, really collaborating, it ensures a consistent and comprehensive approach. And it also reduces the chance of any errors or omissions if people are double checking against their team. Focus on indirect rates and compliance. So those are going to make up a significant portion of the proposal. So you want to make sure that your rates are accurate, that they're well documented, and that they're compliant with the FAR. If you're using a provisional rate, explain how is it developed and how it aligns with your current accounting system. And again, be transparent and justify your costs. So transparency is critical, and documentation is also equally as important. So these would be some of the key takeaways from today's presentation. And that brings us to our last polling question. Amy.
All right, thank you, Karen. So the final question is, what resources do you rely on most for developing proposals? A, internal team expertise. B, online courses and webcasts. C, industry publications. Or D, consultants or external advisors. And then while you're answering that, for those of you that would like a copy of today's slides, you can download them now from your console. And then we're also sending them out via email tomorrow, along with the recording of this webcast. All right, here are the results.
Yeah, that's great. So it does look like most of our attendees do that, cross-team collaboration with subject matter experts. And then also, consultants, external advisors, which is great. Just having that, extra set of eyes, or somebody that's more, kind of specialized in these types of proposals. So that's great. Okay, so I think we're just at about time. I don't think we'll have time for Q&A live, but like Amy said, if you feel free to submit it in the chat and we will get back to you as soon as we can. Here's our contact information. Great.
Oh, go ahead.
No, go ahead, Amy. Thanks, everyone.
I was just going to close this out. So as Karen was going to say, their contact information is in the slide deck, which you can download now from the handouts folder. Definitely reach out to them if you have any more questions pertaining to today's content. And then their contact information is also in the console. And then if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be emailed within 2 weeks as well. And then finally, here's a link to a survey for today's presentation. Your feedback is always appreciated. And again, thank you for joining us, and take care, everyone.